Boulder's market, this has been a very interesting 2 years. Boulder's market has continued to prove to be resilient. It seems that every time there's unrest in parts of our country, whether it be civil unrest, climate change, economic uncertainty, or in this case, a pandemic, more eyes turn to Boulder. And we've seen that perhaps exaggerated over the last 2 years, or since the pandemic began. Largely, our audience is coming from external markets like California, a lot of East Coast, some parts of Florida, which all make perfect sense. It's people seeking lifestyle communities like ours. So that's been a big driver to our market. There's also been quite a bit of internal shuffling, as buyers or homeowners' housing needs have changed as a result of, boomerang kids or kids going to school at home, or just realigning priorities as uncertainty can tend to do. The story of our market lately largely revolves around inventory. As much as we've been an incredibly strong market, our limited inventory is the variable that's holding back our market from even doing more. I think our inventory is down year to date, or year over year is down about 50%. So that's obviously a significant decline. Our sales, thankfully we've seen a great deal of appreciation. So the overall sales volume has gone up despite our declining inventory and our moderate decline in number of homes sold. Because of the rising inventory, our numbers continue to remain strong. A lot of it is our timing. So due to COVID and the shutdown that occurred at March of last year, our market sort of got out of cycle because we were closed during our peak season, and then all of a sudden the market opened up and sort of the gates opened up, and like I said, more eyes got turned to Boulder. I think what we're seeing lately is our market is more normalizing. And I don't mean normalizing in the sense that I'll wait for someone to mute. I don't mean normalizing in the sense that values are declining or that we're reverting back to prior values. I mean normalizing in the typical market cycle. We tend to see a valley around the holidays and a peak around March. That was really shifted during the pandemic. Now, obviously the pandemic's not over, but we've sort of gotten used to our cycle, and we're definitely falling a little bit back into those normal patterns. At the moment, August tends to be a slow month. We've seen that to be the case, although it's been strong. That's continued to be the case. But my expectation looking forward is that we're going to see a bump as we typically do in the fall, and then we'll probably go into a bit of a valley in the towards the holidays. And then my expectation looking forward is that next spring is going to be a market like this last spring. It'll continue to be as good as it has been. So I think looking forward, short of a major national event, I don't really see any obstacles that would get in the way of our market growth. I think all price points continue to be poised for appreciation. And I expect that to continue for the balance of this year, with obviously the prime time being spring of next year. And then, some of the statistics that we're going to walk through here sort of add punctuation to that. We've sort of come across a time where we've got historically low interest rates. There's just a compounding set of variables that have caused this. But, the spring up until now, we had houses were selling for as much as 10 to 20% above asking price. That's not universal and not across all price points, but by and large, that's been a true story. And buyers were so desperate to find houses that they were waiving all the typical contingencies that may give them protection. Contingencies like loan condition, survey, appraisal, even inspection was being waived in many favors. There were offers that were being written from buyers that that basically said, you sign the contract, I'll see you at closing. And that has tamed a bit as some of the demand has gone down. Our average price point, which is still always surprising to me, the average closed price is just over $1 million. You know, this second number, the month supply inventory, a typical balanced market has about 4 to 6 months of inventory. Our market has got 0.7 to 1 month of inventory, which just adds punctuation to the fact that it's still, the market greatly favors sellers. So if a seller is at all realistic on their expectations, they're going to be successful in this market. Our active inventory is down 52%. So like I said before, that's really the variable and the central topic of conversation about our market is, you know, it's sort of a vicious cycle, because all the sellers are saying, sure, I would sell, but where would I go? So our limited inventory is almost holding up our inventory. But hopefully we'll start to see that normalize a little bit as spring approaches. Average days on the market obviously is going to be lower. It's 27. Realize that the average days to office, the average days on the market is reflective of the time it takes to close. The average days to offer is probably 3. So that's, you know, that's a notable shift in our market.